Good morning, everybody. Just kicking off, and I don't want to bother you with too many slides. I just wanted to go to some aspects of the European residential markets that might give you a little bit of the background for the discussion we are having later on. So when we talk about the European residential market, something that we should keep in mind actually, that the market's behaving quite differently. That what I just showed you here on the slides is the house price development since 2003, and you see there broadly we have two groups: the markets with declining prices compared to what we have seen in 2003 or declining prices in the last 3-4 years, and on the other side we have on the left side the markets where you have rising house prices, with the most extreme cases being Norway market that have seen more or less continuous growth since 2003. So as it is now, there's not one European market, and if you then take into account that you have different legislative structures in the markets, that you have different rental legislation in the markets, that you have different tenure structures across Europe, actually it's quite a difficult task to talk about one European residential market or make one European residential briefing. So Richard will have a nice job then just to cover the whole of Europe in the discussion later on. When you look at European residential markets, one of the points that everybody's discussing with you is demographics, because demographics is the main driver of residential demand, as it's one of the main demand side influences. What we've tried here is in yellow you see the dots represent the combination of aggregate house price growth between 2000 and 2012 compared to on the y-axis population growth. So what you see is, yes, there is a link. The higher the population growth has been, by trend there was a higher house price growth. So demographics should be seems to be a driver. But what you see in red here is a little bit of a negative relationship, and the negative relationship is based on old households, the growth of old households relative to the working age population. And as we have an aging population across Europe, this is one of the main drivers in the future. And what you see is in countries where population is aging faster, house price growth tend to be slower. So if you go forward and look at across Europe, you will have in the future an aging population, faster in some countries, slower in some others. This will be a major hindrance for substantial house price growth in a lot of areas, in a lot of countries. And that is something we'll have to take a much closer look on in the future, not only if you look for the demand side for senior housing, but also if you look on the overall demand side for rental apartments or for owner-occupied houses. On the other side, looking at the construction sector, just to give you a broad overview, on the bars show the housing stock, with Germany being the biggest country with more than 40 million apartments or houses or condominiums, with France and the UK the second and third largest market, Italy and Spain falling short. And with the dots you see in red, you see the completions as percentage of stock between 2010 and 2012 per annum, and in yellow you see the expected completion as we expect them for the 3 years 2013 up to 2015. More or less you see a stabilization of construction levels in Europe. You have only 4 countries left that have declining construction levels, mainly the Club Med countries, Portugal, Spain, Italy on the one side, the Czech Republic is a little bit in this group too. And on the other side, rising construction we only expect for Germany and Norway. Norway a very special case given the oil-driven economy, the high immigration. But what you should keep in mind is these are countrywide pictures. If you look at the urban agglomerations across Europe, given the internal migration, you more or less have a housing shortage in nearly all the European countries, because construction is simply not following the internal migration patterns in most countries. So although it might look balanced on the aggregate level in a lot of countries, the internal differences in most countries are so severe that you really can talk about housing shortages in the main agglomerations across all European countries. Coming now to the investment side, what we try to look at is a little bit of looking at the attractiveness of multifamily housing investments. That's in the red bars represent more or less the range of yields for multifamily housing. It's more or less the gross yield. And the red triangles represent the yield on 10-year government bonds in the respective 10-year government bonds. And the gray bars are the yield spread you have for the prime end. And that shows quite clearly why residential, although it traditionally has a quite low yield, is in the current environment an attractive investment opportunity because it has a substantially higher yield than government bonds. And when you look at the real estate sectors, residential is the most bond-like type you can really invest in because given that you have a high granularity of the tenant base, you have a quite stable cash flow, you have low fluctuations, and that's the only sector where you really have the closest link from the cash flow pattern to government bonds. On the other side, what you have to say is what's happening when government bond yields go up. That's something possibly for the discussion later on, because that can be a challenging environment maybe in 3, 4, 5 years to come in the market. Overall, these are some kind of total return perspectives. I wouldn't go to them in detail. The only thing I want to mention is currently, at least from Patrizia side, we expect the Dutch market to be the only one showing a little negative capital growth for this year. But going forward on a 5-year horizon, we expect positive capital growth more or less in all European markets where, based on IPD indices, we have a little bit of a history. Although not covered in this report are markets like Ireland, for instance, where I would say from the research side and from the market fundamental side, it's quite a very interesting market. And when you see what happened in the last 12, 18 months in this country, that's what a lot of investors figured out. And the high interest in this market really proves that there is much more than the classical residential markets in Europe currently. Talking what I've also done so far about residential investment, actually, it's a very diverse breed of investment because you have the typical core strategy, which is more or less buy and hold, new build existing stock. You have a very vast and diverse area where you have value-add investments that can be working on under-rented portfolios, under-rented assets. That can be wholesale to retail conversion, so meaning you buy a block and privatize it in the condominium level. And these value-add investments in many cases don't have a very much higher risk level than the typical core strategies, but they offer you a higher return side. And that's what increasingly the investor side is looking at. They want to have the low risk associated with residential, but at the same time what they also want is they want a higher return. And the value-add segment in this area is one of the areas where we strongly believe we see a lot of things happening in the next 2 to 5 years, because that's the area where the investors' needs can be fulfilled. You can have a little bit of a higher income return, but you also can have an IRR-driven approach where you can generate capital growth and these kind of things. So overall, maybe ending with a quote of Alvar Aalto, the famous Finnish architect, that gives something of the things we should remember when we look about residential, which I find quite interesting. We should not only look at the housing problems that we all across Europe have in different countries and regions. We should actually look at housing more on as it is involved in our daily work and all the other functions of a city, because that's what will be the main driver of success if you operate in the residential market in coming years. If you want to have a little more information about what I've told you so far, we presented our report yesterday. You can download it from our website, and Richard promised me to also install a link on their website, so feel free, or just come around to me and give me your card and I will send it to you. Thanks and now back to Richard.